Hello everyone, I'm Ms. Tressy Pinto, Faculty, Department of Commerce. Today I'm going to deal with the concept that is basics terms in the income tax. So first we'll see what do you mean by income tax. So normally before that tax, what do you mean by tax? The word tax is not at all new to us. So the word tax has been used in the ancient times. So in the ancient time, the kings were, in order to rule their kingdom, they used to collect or in order to administer their kingdom, so they used to collect the tax. So the word tax has been come from the ancient times. So now the government is levying tax or imposing tax on the normal people in order to earn some of the revenue to the government. So the tax is an income which has been received by the government regularly from its taxpayers. So what are the classification of taxes, especially in India? There are two kinds of taxes. One is direct tax and one more is indirect tax. So direct tax, in the sense directly tax has been paid by a person to the government. It is directly paid by a person to the government. So normally it will be income tax or wealth tax, such kind of taxes. One more is indirect tax, where it is not directly paid by the person to the government. Instead of that, it is paid indirectly. For example, goods and service taxes, where we are paying tax on the certain products, where that particular person later he will be paid to the government. Tax will be paid to the government. So there are two kinds of taxes. One is direct taxes, one more is indirect taxes. The next term, income tax, is very important direct source of revenue to the government. Why the tax will be collected, or what are the main objectives of the taxation? One is funding law and order in the country in order to promote the welfare of the people. Next one is development of programs in specific need based on areas and for bridging the gap between the rich and the poor. And one more is in order to achieve balanced socio-economic growth in the country. Mainly tax will be collected in order to administer or in order to improve the economy as well as the growth of the country. These are the main objectives. That is why they are collecting, or the government is collecting the taxes. Now, who is liable to pay the tax? Any person whose taxable income for the previous year exceeds the exemption limit, that person is liable to pay to the central government, that is income tax, during the current financial year at the applicable rate during the current financial year. So when we say financial year, in the financial year we are paying the tax of the previous year. So previous year, whatever income you have got, on that, if certain income exceeds the limit, on that limit you need to pay the tax to the government. That is specially of the previous year's income, on that you are paying the tax in the current financial year. Okay, what are the principles or the basic for charging the tax? One is, it is an annual tax on income. So on income it will be tax, annual income. Only once you need to pay to the government. Tax need to be paid to the government. Income of the previous year is taxable in the next following assessment year at the rates applicable to that assessment year. Already I've explained here. In the assessment year, you need to pay the tax on the income of the previous year. Nothing but previous year's income, on that you are paying the tax in the current year. or the current assessment year. And the tax rates which are there, that is fixed by the Finance Act. According to you, you can't pay your tax, or the certain rate, on certain rate you are not going to pay. Already the rates have been fixed by the Finance Act. Such rates only you need to pay. Next is a tax is charged on every person. So each and every particular person, on them it is charged. So it is a charged on the total income of the SSC computed in accordance with the provisions of the Act. So the tax will be charged on the total income of the SSC. And there is one more point, that is tax is deducted at source. We call it as TDS, or paid in advance under the provisions of the Act. Let us move on to the next topic, that is heads of income. First one, we have income from salary. For income for what we have worked, for that we are going to get, that is income from salary. Next one is income from house property. Whatever houses we have, for that we are going to give it on rental basis. From that, whatever we are going to earn as a rent, that will come under income from house property. Similar, we have profits and gains from the business and profession. From business, whatever profits we are going to earn, that is will come under the profits and gains from business or the profession. Next one, we have capital gain, and one more we have income from other sources. So these are the main 5 heads of income through which we are gaining the income. So this will be added together. Once we add all the 5 sources of income, where we will arrive at gross total income. When 5 heads of income added together, we will arrive at the gross total income. After the gross total income, once we have calculated the gross total income, from there we have to deduct the certain deductions, especially from ATC to ATU. Okay, once we deduct that certain deduction, we will arrive at the total income. On this total income, we are paying the tax. That only when, if the total income exceeds a certain limit, then only we are paying the tax to the certain tax rate. On that we are paying to the government. So the amount thus arrived at will be subject to any advance tax paid or tax deducted at source. In case we have paid already, advance tax has been paid, that can be deducted over at this point. These are the some of the terms which we use in the income tax.